Today, we're diving into Belrise Industries, and there's a really interesting story playing out here. The company's been in the news for two big and kind of contradictory reasons. They've just locked in a massive new business deal, but at the very same time, the founders have been selling off their shares. So, what's really going on here? Is this a fantastic opportunity, or is it a hidden red flag? Well, let's unravel this whole story, starting with that big news.
First up, the deal that has everyone talking. Belrise is making a huge pivot, a really strategic move into the defense sector. And this could honestly reshape the company's entire future.
Let's just talk about the sheer scale of this partnership for a second. Belrise has signed a 3-year deal with Plasan Sasa. Now, this isn't some small firm. We're talking about a major $2 billion Israeli defense company. They're a global player, supplying armored vehicles to militaries all over the world. The US, Europe, the Middle East. This is no small contract. It's a massive international alliance.
And this deal has two really powerful angles. Domestically, Belrise is going to be supplying India's own military and paramilitary forces. But here's the real game changer. On the international front, Belrise is now the prime supplier for Plasan Sasa's future orders from other countries. This gives them a massive direct pipeline into the global export market.
What's absolutely crucial to understand is that Belrise isn't just a hired gun here, just making parts. No. Plasan Sasa is transferring the whole shebang, the complete know-how from design and manufacturing to quality control and innovation. This builds deep, long-term skills, not just a quick revenue boost.
So why this big move? It's pure strategy. The management wants to cut the company's reliance on the auto industry, which, as you know, is a total roller coaster. Big ups and big downs. This deal is a very deliberate step into high-growth, high-tech sectors like defense, which should create a much more stable business. Now, at the very core of this entire partnership is a single, pretty groundbreaking piece of tech called Atom. And as you're about to see, calling this thing a trailer doesn't even begin to cover it. So ATM stands for All-Terrain Electric Mission Module. Just think of it as a smart, robotic, self-powered trailer. It's got its own wheels, its own motor, its own battery, making it this intelligent platform for all kinds of modern military needs. Seriously, think of it like a Swiss Army knife on wheels. It's a mobile power bank that can charge drones way out in the field. Its smart towing system syncs up perfectly with the vehicle in front for incredible maneuverability. And get this, it can even be detached and sent into high-risk zones as a robotic scout. This is an incredibly advanced and flexible piece of technology.
Okay, so the business side of things looks fantastic, right? Which brings us to the big puzzle. If everything is going so well, why in the world are the company's founders selling their shares?
This is the question that rightly makes you pause. A major deal is announced, and then boom, the promoters unload a pretty significant 6 to 7% stake. On the surface, that looks like a major warning sign. But is it really?
The answer is actually all about regulations. This wasn't about a lack of faith in the company, it was purely a procedural move. Here's how it worked. Two of the promoters' separate entities were already scheduled to merge. The thing is, after that merger, their combined stake would have gone above the legal 75% ownership limit. So, to follow the rules, they had to sell a portion before the merger was completed. It was a proactive move just to stay on the right side of the law.
And here's the best part of the whole story. Who do you think bought up those shares? Some of the biggest names in the investment world. We're talking giants like SBI Mutual Fund and BlackRock, plus a bunch of other major institutional players. They saw this sale as a golden opportunity to get in.
So at the end of the day, that promoter sale wasn't a red flag at all. When you see who is lining up to buy those shares, it completely flips the script. It actually becomes a massive vote of confidence in the company's future.
Okay, so let's put all the pieces together and look at what this really means for the company's financial health and its potential for growth going forward.
First, let's talk profits. The company's existing auto business, it runs on decent margins, around 12%. But this new defense business, that's a high-value, high-margin venture. Now, it's going to take some time to really show up in the numbers, but this whole strategic shift is designed to seriously boost the company's overall profit margins in the long run. Next, take a look at the balance sheet, because this shows another huge positive. Since its IPO, Belrise has literally cut its total debt in half, from around 3,000 crore down to 1,500 crore. Deleveraging like that creates a much stronger financial foundation for them to build on.
And all of this translates into some pretty powerful growth potential. Thanks to that stronger balance sheet and these new business ventures, analysts are projecting that the company could deliver annual earnings growth of 25 to 30% over the next couple of years. That is a very, very strong outlook.
So let's just recap the key takeaways here. Belrise is making a really smart move away from the up-and-down auto industry. They're jumping into the high-margin, high-tech defense sector. That promoter sale that looked worrying, turns out it was just a procedural thing that actually attracted the world's biggest investors. And with a much stronger balance sheet, the company is now set up for some serious earnings growth.
And that really leaves us with one final thought. When you combine a clear diversification strategy, a much healthier balance sheet, and strong backing for major institutional investors, you have to ask, is Belrise in the middle of building an entirely new and far more robust growth story for the years ahead? It's certainly one to watch.